Welcome to everyone. This week video will cover the SP500 for the week of March 3, 2025. Before we start, make sure you read carefully the disclaimer. For the past few weeks, I expected the major American stock market indices forming a major high. Today let's see what we can expect for the next few weeks. Let's start with the 20-day cycle. On February 24th, the SP500 met his 5,978.91 target, triggered on February 21st, and is now on his way to form the 20 days low on February 28th. The next 20 days low is scheduled on March 17th, the green dashed vertical line. This date is based on the regular Hurst nominal model. But since, lately the cycles run little bit longer than their average length, we can expect the next 20 days low will form little bit later than expected. What's next? On a bullish market, we will expect the SP500 rally and cross above his cycle line, providing an upside target. But since we have lots of weakness in the market, there is a possibility the SP500 will rally toward his cycle line, using it as resistance without crossing above, then resume his downtrend. The peak for this 20-day cycle is expected on March 9th. Here the cycle line for this week, with their potential upside target if the SP500 cross above them this week. With 5 successful signals out of 6. The success rate for the 20-day cycle is so far 83.33%. The 40-day cycle. On February 25th, the SP500 crossed below his cycle lines at 6,032.90 and 5,992.16. Providing a downside target zone between 5,918.37 and 5,836.89. On the same day the SP500 touched lightly the top of the zone, but on February 27th and 28th fill up completely the zone. With a 5,837.66 low on Friday, the SP500 was right on the bottom part of the zone. The February 28th was certainly the 40 days low. If that is correct, this 40 days cycle was 46 days long, 12 days longer than his 34 days average. Like mentioned on the 20 days analysis, it seems the cycles run longer than their regular length. Technically at that stage of the cycle. Since it's the first 40 days since the last 20 weeks low on January 13th, the market's supposed to find support on his cycle lines, and not crossing them. This is another sign of weakness. Using the Hurst nominal model, the next 40 days low is expected on April 13th. But again, there is possibility the SP500 form his next low few days later. The success rate for the 40-day cycle since the beginning of the year is 100%. With 2 trading signals, which both was successful. Here are the cycle lines for this week with their potential upside target if the SP500 cross above this week. The 80 days cycle. Like mentioned in my previous updates, the 80 days cycle lines are very important to keep an eye on. The 80 days cycle line is a very important cycle lines, because they help to define the strength of the longer cycles. I will come back on that topic in another update. For the second time of the year. On February 25th, the SP500 gave a trading signal. This time was on the downside, invalidating the previous 6,343.79 upside target, when the SP500 crossed below his cycle line, at 5,998.03 and 5,950.33. Providing a downside target zone between 5,848.63 for the top of the zone and 5,753.23 for the bottom part. The Friday's 5,837.66 low enter slightly the top of the zone, meeting his target. Is it the end of the decline? Not necessary, because the next 80 days low is scheduled to form on March 22nd, the vertical purple dashed line. At the actual time of the cycle, the SP500 should trade above his cycle and form his low on his cycle lines. Finding support at the time of the first 80 days low formation, since the last major low on January 13th. The fact that the SP500 already crossed below his cycle lines. Give more credit for the February 19th, 6,147.43 high as a potential candidate for the 18-month cycle peak. What's next? The market should rally toward his cycle line, and at least trade sideways on his cycle line. The more positive option is the SP500 cross above his cycle line, trying to make a new high for the 18-month cycle peak. Here are the cycle lines for this week, and their potential upside targets. But since there is a high probability of the February 19th high is the 18-month cycle peak, there is the possibility the SP500 will rally toward his cycle lines. Use them as resistance and continue his decline until the third week of May. Where do the Hurst rule of synchronicity? The 20, 40 weeks and 18 months should form a major low. The only positive news was the Friday impressive green candle bar, confirming the low was at least a 40 days low. Since by crossing back below his cycle lines before meeting his previous upside target, the success rate is 50% for this year. We have two trading signal, one negative and one positive. The 20 and 40 week cycle. For the 4th weeks on a row, the SP500 median price trade on his 20-week cycle line. This week the median price was few points below his cycle line, so we can estimate a crossing point at 5,953.27. For a potential target at 5,759.11. 194.16 points, or 3.26% of potential decline. To validate this target, we need this week the SP500 trading below his 20-week cycle line. This decline should bring the SP500 to the next 20 weeks low, and like mentioned above will conclude the next 40-week cycle and the 18-month cycle. The 5,759.11 could be a minimum target, since it will also be the 40-week cycle. The SP500 should cross below his 40-week cycle line on his way to form his low during the 3rd week of May. Here the 40-week cycle line for the next 3 weeks and their potential target. We can also notice how the 40-week cycle trend line, the blue trend line, provide a strong support to the SP500 market. Last week low the SP500 found support on it. We have to watch carefully the SP500 reaction during the next few weeks with his cycle trend line. Soon it will cross sharply below and stay below. This will confirm the highest high before the crossing below his cycle line will be the 18-month cycle peak. And the SP500 will not make a new all-time high before end of May. The 18-month cycle. At the time of the 18-month cycle low formation, the cycle line will be between 5,530 and 5,385. Technically, the SP500 should find support on them. But a more precise target will be calculating when the SP500 will cross below his 40-week cycle line. When analysis a stock market, we always have to have a plan B. If the SP500 cross sharply below it, then we have to reconsider the last 54-month cycle position. But for now this discussion is purely academic. In conclusion, the SP500 is on his way to form his next 18-month cycle low, due by the end of May between 5,530 and 5,385. If you enjoyed the video, please give it a thumbs up to support my channel. Share it with others, and subscribe so you don't miss any important updates. This concludes this week's video. Thank you for following along. And I'll see you next week with another exciting installment.